Good afternoon, traders, and welcome back to the Hot Stocks Outlook for December 7th, 2018. Hope you're all having an excellent week in the financial markets, and as always, plenty of opportunities to cover. We're going to go ahead and start here on U.S. steel. Really a lot going on in the steel manufacturing. Equity Commonwealth. So we looked at American Asset Trust last week, some of the higher yielding real estate companies actually doing pretty well. We got consumer staples here, General Mills, Express, and also Callaway Golf, which we ended on last week, and we'll go ahead and catch up how these forecasts have been performing over the past week here. But starting here in U.S. steel. Now, very important, what we have here on all of these charts is daily price action. So each one of these bars represents a complete trading day. And against that price action, you see that we have a couple indicators right up against the price action, but also at the bottom of the chart, you see we have a red line. We can go from red to green, and also a predicted candle, which we'll go ahead and explain here how the entirety of this forecast rounds out to help traders with their decisions in the marketplace. But starting here with U.S. steel, that blue line we see crossing below the black line. Now, the black line that you see against the price data, that is a actual or simple moving average. So very common technical indicator. Great job of summarizing what's already occurred over a given period of time. But what we want to compare that value to is this blue line. And this value, for it to be generated, is utilizing the artificial intelligence found within the VantagePoint software. It's a technology called neural networks that's actually utilizing predictive data, incorporating it into this indicator to create a predicted moving average of where prices are expected to move going forward. So when that blue value drops below the black value, in this case, it's telling you, look, the trend is down. Predicted prices are expected to move lower than where the market has actually been. So as long as that blue line remains below the black line, you know the direction is down. Now, in addition to that, you see this red and green bar at the very bottom of the screen. This is an extremely accurate indicator, upwards of 85% accuracy from this indicator, but it's looking ahead just a couple of trading days at a time. So very short-term strength or weakness in the market. You see you get a little bit of bullishness here where the market isn't declining over these couple of days. It's consolidating a little bit and bouncing higher. And then a little bit here where you see the market bounces a little bit. You want to be prepared for that short-term strength or weakness, but obviously not lose track of the bigger picture as far as trend, and then use these predicted highs and lows to really help you with that. But we can see how accurate these forecasts are. So you see we get that blue line crosses below the black line. We can actually bring up those predicted ranges that you have ahead of every trading day, just like we have it here. Actual trading day is going to fill in this area, and we're going to know how accurate these predictions were. But here we can see all the predictions against the actual market data. So what was the prediction and how close was the actual candle to meeting that? And you see as these trends start, just great opportunities that say, hey, look, the trend is down. Expect a little bit of strength. You see you got it on this trading day saying expect strength over these trading days. So don't have your stops up here in this mess, but short from the predicted highs and express that, looking for that trend to move to the downside. You see multiple opportunities here where you get towards those predicted highs, but the last thing you want to be doing is not taking a short position. Understanding, look, the trend is lower. As long as that blue line remains below the black line, you want to use those levels to set those short positions and express that overall trading strategy. Whether you're a trend trader or shorter term, day trading, whatever you might be doing, but make sure that over the course of this 14 trading days, you're shorting the market. You see the market's down 18.5%, over $5 per share. On 1,000 shares, 500 shares, you're making at least a few $1,000s on a single move to the downside here in U.S. steel. Now, moving on, we've got Equity Commonwealth, and we looked at American Asset Trust last week. And actually, if we look at things like the utility space, some of these higher yielding areas are actually doing well. This is going all the way back to October. And you see that blue line, that predicted moving average saying, look, the trend is up. There's really no business to be shorting this market, but you're going to get those instances where you get that short-term weakness in the market. You see a couple days of weakness, but the blue line still remains above the black line so that you don't jump out of your position and stop sticking with your game plan, that you take advantage of that and understand, okay, well, on these dips, where should I be expecting price to move? So you get picked up there. Here you push a little bit lower. By the end of the day, you're closing, in the middle of that range. And look how many of these trading days within that 24 to 48 hour period, you're already trading higher and in line with that uptrend. So we see just multiple entries here, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 entries that move in the desired direction, have a great intraday level to get involved in, but within 24, 48 hours, you're in profit, can look to, take some profit at the VantagePoint predicted highs are often a good level. But not a lot of areas in the market that are doing extremely well here, but you see 8% move to the upside, plenty of opportunities we can see from, the predicted low ranges to be, taking a couple of percent out of this move, targeting those predicted high levels and making a little bit of money on the upside, where markets have really been overwhelmingly, fairly bearish here and weak. Here's General Mills. So, a lot of consumer staples did really well during that nasty bout in October. But now things are changing. Crossover to the downside, neural index at a 0 here. You see you get a one day where you're at the neural index, quickly goes down to a 0. Another day here, you get a little bit of a retracement. But the trend very clearly to the downside. No reason you'd be looking to get long. You just see the huge amount of separation between these values, signaling that this is a very, very strong trend. You see things really accelerating over the past couple of trading days here. But again, you want to use your predicted shorter term levels, not just come in and take whatever, price you get at the market open, but understand, deal with that volatility over the next couple of days. And good to get a good entry, so you get a good entry, take advantage of this period, instead of chasing the market over here, just wait to get these levels to come back, to move towards those predicted highs and get the best part of this sort of move as the market continues that trend and moves lower. So again, just really nice opportunities, but on the short side. So you got to be willing to understand that, okay, well, things have changed and shifted. There's a lot more opportunities to the downside here. As you see 10% move in just 10 trading days, or $4.60 per share on a stock that's only trading at about $40. So about 10% move very, very quickly here, and multiple entries there at the early part of the trend. Then for a trend continuation to take advantage of this more recent weakness here. Here's Express. So a lot of the mall stores also doing very, very poorly. Some of the smaller retailers, crossover to the downside, neural index at a 0. You see, we get those periods of time where the market runs sideways and some consolidations happening. But when you understand, hey, there's a little bit of strength here, but the trend still very much to the short side, you understand, look, keep with those short positions, keep buying those put options, keep expressing essentially how these forecasts are indicating the market's looking to move. So you can get those short entries early. You see that volatility really carries things lower. And another entry here where you see, trading towards a predicted high. I'm sure you're moving towards, these predicted lows here already, and you can take some profit and manage that position and keep looking to improve your overall price and entry into the market. Lastly here, Callaway Golf. So, crossover to the downside, neural index at a 0, we get our little consolidation phase, but just a ton of separation between these values, indicating that you want to look to remain short in the market. And this is something that we brought in last week where, we understand that, very clearly we're getting these crossovers to the downside. We have our predicted high levels achieved at the early part in the trade. But, just over the past week, well, what's happened in this market as far as the forecasts are concerned? Weakness on every front, right? The trend is lower, the neural index is weak. There's a lot of separation between these values. You see this market declines yet again, another 10+% decline just over the past week here, another 12% move. So this is how this can help you understanding when to get short, when to start that campaign of shorting at those predicted highs, but also when to stay into the market and make sure that you capture the entire move as you see this market really getting hammered as this overall weakness sets in. So really great opportunities all through the market. You see about 236 to the downside there, really about 477 over the course of the move. And this is only a $20 stock. So, easily something you can buy several hundred shares of. Get that short position, trail your stop, and make a lot of money on this decline lower. So as always, guys, thank you all for watching. Best of luck to the traders out there in the markets. Once again, this has been our Hot Stocks Outlook for December 7th, 2018. Thanks again, best of luck, and bye for now.